The Morning Drive with me, Tim Elliott, here at Mirror Business FM. Welcome to the show. To get in touch with us, very simple, info@mirror.fm or whatsapp.mirror.fm. We'd love to hear from you. Right now, gold, precious metals, silver, platinum, palladium, etc. For some reason, I have a note at the top of this, and I'll come to that note in a second. But my guest, of course, is Jeff Rhodes, Principal Consultant at Rhodes Precious Metals. Nice to see you, Jeff.
Good morning, Tim.
Always good to have you here. And I preface this by saying I've got a note here. And I don't know why I did this, and it's in bold. I actually make notes before you come in. I do some research. Not that you would notice, but I've got note, gold gained 64% in 2025. And I think during the course of this week, I did that as to keep in context what's happened in the last 12 to 18 months in the gold world, because of what's happened over the course of the last kind of week or two, to keep some kind of, I don't know, sense of reality? I don't know.
Well,
is that even possible now?
It is. I would say you're really on the right lines here, because almost I feel myself, and I'm in the middle of it. It's unreal. Just the nature of it is like it's like fantasy football.
It's how
like
it
a fantasy bullion market.
Yeah,
and it really is. We're seeing things that I never thought we'd see. A normal day's trading now, Tim, is $500 between bid and offer. Now, I went through an exercise last year, just picking out how many days we had 100 days trading range. Probably 10.
Right.
Not many.
Yeah.
And here now this year in our first month, it's quite normal to have $500, and it's something that talks to why is this happening? So much interest in gold, so much inward investment into gold, silver, platinum, and palladium that it's almost too big for the infrastructure.
Yes.
So there is a very strong global infrastructure, bullion banks, brokers, traders. But the fact is, compared to the big FX markets, like say the dollar euro, it's small. And you look at the treasuries market, and you look at equity markets, much bigger. So you can get a lot of money coming into those products, into those investment vehicles, and it doesn't have that much of an impact. If I said to you, silver yesterday, Tim, is down 20%. 20% in a day.
Yeah,
now, if I was to say to you, Tim, the Dow Jones is down 20%, it's like, it would be, what are you talking about?
That would be a major global headline, crash
I think that's a very good analogy to sort of compare the ranges that we're having. The volatility, intraday volatility, is just incredible. And I do feel, last week I noted that trading volume, average trading volume, was about half of the previous 2 weeks.
Okay.
So it tells me that the market is starting to stabilise.
Okay. So look, I mean, you know what I did this week? I've just made a lot of notes based on your report and based on what I'm reading, rather than kind of structuring questions for you, because I don't really quite know what to. Normally, you kind of know what to ask. Yeah. Kind of know. Yeah. At the moment, it's really all over the place. My first kind of comment to you was last Friday, gold and silver prices, last time you were here, plunged. And that's as US President Donald Trump's nomination for the next chair of the Federal Reserve, Kevin Walsh, appeared to relieve concerns about, the independence of the central bank. So the dollar shot up. Then you texted me Saturday morning. Hello. Yesterday, my market report called for a correction to 4,600. Low was 4,680, down from 5,600. So I'm at home thinking, that's the oracle that is Jeff Rhodes once again. But you were absolutely right. And then your Saturday report, which came on the
weekly
Sunday,
one, yeah.
your weekly one, which I do read. Gold slumped from an early high for the day of 54.51 to 50.63. Followed by another drop, and it bottomed out of 46.80. 922. I know these are a lot of figures, but you know where I'm going.
Yeah.
$922, 16.46% below Thursday's latest record high price of 56.02.
Yeah.
I can't get a grip on this, and I know that you're in the same kind of place.
Yeah, it is. It is all over the place. I would add something else. So in the weekly report, I called for a low this week of 4,400.
You did, yes.
And do you know what the low was?
I'm thinking the oracle's coming out again.
4,403. Oh, I was off by $3. Sorry, Tim.
You gotta do better than that.
I'm going to have to improve a bit. I think it's fair to say that you really have to be an oracle to get gold right now, because it's just all over the place. I think, as I say, going back, there's too much money chasing too few kind of ways to the markets are just not big enough to absorb the amount of money that is coming in to gold and silver. That's why you're having this extreme volatility. I think it's going to fade, though. It feels to me as though we should go in. February, I think, could be a month where we really do calm down.
Okay.
I fancy gold to settle into 4,000, let's call it 4,250 to 5,250.
Okay.
In this month. Silver, who knows? I mean, silver went from 121 to 70. In fact, this morning it's 65, Tim.
When I looked early this morning, I'll tell you, I keep figures every day.
Yeah.
It was 73.01. It dropped way below that.
65 this morning.
Yeah, I know.
Yeah.
Well, I want to come to silver in a minute, but there was something else in one of your reports this week, and I think you were talking about drivers, the appointment of Kevin Walsh, and what was it? US producer price inflation data as well. So two events that kind of brushed interest rates off the table. You pointed out, at least in the short term. And here's the quote: "It triggered the most violent reversal of fortune I have witnessed in my 47-year career in the global bullion market." And that kind of jumps off the page and highlights, kind of reinforces everything that we've both been saying.
Absolutely. It is that volatility. And Tim, volatility is actually bad for the jewellery sector. I mean, here in Dubai, our main concern with gold is the jewellery sector, and it's very important to the country. Volatility of this kind makes it very difficult for inventory management. Really, you don't know what it's going to cost you. So,
well, you don't, and you've also got people making informed choices about whether they bother to invest in gold.
Absolutely. Look, obviously, as prices go up, it makes it. You have the same amount of money buys you less gold. So the same money last year would have bought you 64% less gold. So you got your money, you save your money, you're going to buy the wife a present, and you're going to buy a nice piece of gold, and realise that suddenly you can only get half.
Yeah.
And then the jeweller's only selling half of that volume. So it's not, and the fact that you can't predict where the price is going to be like next week, let alone next year, does make life very difficult for the jewellery sector.
It makes it harder to ask you realistic questions as well, because I was thinking earlier this week, I was going to say to you, what of the effects of Donald Trump announcing the trade deal with India, which was, Monday, I think, last week. So that slashed US tariffs. So you would expect a knock-on effect. I think the amount of trade between India and the US in gold is probably quite limited.
I would have said. But lowering tariffs, removing tariffs would be great for world trade. But the trouble is, you don't know if Donald Trump's going to reverse that next week.
Well, this is the thing, but it's the sentiment behind that decision, that immediate decision, that makes has that immediate difference.
It's good though. Like, I think agreeing trade deals. Here in the UAE, we've been agreeing trade deals, CEPAs. They're called CEPAs with countries around the world, and it's very, very positive. And as I say, I welcome it. Certainly, in the field of business that I operate in gold, the removal of barriers is a good thing.
Let's talk about silver a little bit.
Silver.
Yeah, I know.
Hi-ho, silver lining.
Well, quite right. Well, is it hi-ho at the moment? I'd argue not. When we last spoke, we were amazed at the price of silver because, amazed is the wrong word. It was a mixture of surprise, fascination, and disbelief, probably.
Disbelief, yeah. Shock
more than
and
anything.
awe.
Yeah, shock. That's a much better phrase.
Yeah.
Yeah. What do you make of silver being at 65 when almost yesterday, it was 120?
I did call it, Tim.
I know you did. Yes,
I did call it. I felt my target on the upside was always 60. This is when it was around $25, $30. My target was 60. We blitzed through 60, and before you could blink, it was 120. I think that last $60 was pure froth.
Yes,
I do, honestly.
Okay.
And the right number for gold in terms of relative demand versus supply is around 75.
Silver
At the moment.
Yeah. Okay.
But this year, you are going to have more silver bought industrially than is produced. So you've got demand over supply again this year. And I think what we're going to do is move our way steadily. We're at 65, 70 at the moment. Over the year, we're going to go back to 120, 125. And then within that, there will be a spike to 150. So fundamentally, I'm bullish for silver based on demand supply. Just that. And if we do have some uncertainty creeping into gold again because of Donald Trump, that feeds into silver, and that gives you a little bit more. So fundamentally, from here, I see a much higher price, but gradually over the year. And that would be great for everyone. That would be really good. What doesn't help is to have 20% up, 20% down in a day. That kills everyone.
No, I mean, silver had its worst day since, 1980 was it last week or the week before? Was it Thursday? It was down nearly 40% in a day.
That's amazing.
Yeah, that's remarkable. It's funny, I was reading a couple of analysts about this, talking about a roller coaster ride, and I was thinking to myself, how can I localize that? So I thought, it's more like the Jumeirah, really, isn't it? It's that real kind of up and down, here we go, before you leave.
And the charts, of course, we now have the Burj Khalifa charts. That's now officially in the sort of technical jargon that we're looking when we're looking at charts. You've got various patterns in that, and you've now got this Burj Khalifa pattern.
It had to happen, I suppose.
Yeah.
So the observation is, I suppose, all in all, a lot of people have made a lot of money. A lot of people have lost a lot of money.
Yeah, it's very. But remember, it's a zero-sum game.
True.
For every buyer, there's a seller. And,
that's true.
Look, I believe rising prices for any product are actually good. It shows health in the economy. So I do believe rising prices of gold, rising prices of silver, platinum, and palladium, actually good for the world. Actually, not that good if you're a speculator on the wrong side, of course. But you should not speculate. Gold isn't a speculative vehicle; it is a savings vehicle.
Yes.
If you want to speculate, you should speculate in some maybe palladium, which I haven't got a clue, Tim. Honestly, I don't think I've ever made $1 trading palladium. So please, anyone listening to me, if I talk about palladium, do the other thing.
There's the advice. The thing is about you, though, is, and this I noticed. Look, you're still smiling about this, and I'm not just observing that, because you're sat in front of me, but you're still bullish about this. I mean,
Yes,
you're optimistic.
I am very, very optimistic, and I guess it's a bit like property here in Dubai. You do get dips, but really, it's a long-term trend up.
Yes. Yeah. Okay.
With gold, certainly gold and silver and platinum. Long-term trends are up, and palladium will follow. You don't have those three going up and palladium going down. But as I say, difficult to call. But I'll stick with my prediction for gold: 6,500 and $150 for silver. Still very much intact.
Okay, well that's interesting. I was going to ask you that. So effectively, no change in the Rhodes
I think
mindset.
the dip.
Sure. Which you
good.
called?
No, it's good.
Yeah.
It's really good because a lot of people who, I missed the boat. Well, now they haven't. And if they don't go in now, then they've had their chance. But certainly when they once came back, here's the chance to get in for higher prices later. But don't look at this once you go into gold or silver, don't look on it on a day-to-day basis. It really is medium to long term.
Let's go forward a little bit and look at a few things that you've noted, a few things that people are thinking about that could impact, the upward movement, the downward movement. Donald Trump said on Wednesday, not much doubt in his mind that benchmark US interest rates will be lowered by the Fed, while Treasury Secretary Bessent said he had no opinion on whether the president has a constitutional authority to fire a Federal Reserve chair or board member. So some...
Yeah, but he's not firing. He hasn't. He's so lucky, Donald, because he hasn't had to fire the Jerome Powell. His term of office comes to an end. I think it's in March.
But it's this speculation. It's the gossip around the water cooler around
Donald
this,
Trump
isn't it?
has said many times he thinks 2% is the right interest rate for the United States. It still gives you a positive carry. And his view is that if you lower interest rates, you lower inflation.
That's his view.
Oh, I agree with that. I agree with that because what is your biggest cost in the month? It's your mortgage.
Generally
speaking. Higher interest rates, you still have to have your mortgage, you still have to pay it. Then you have to ask for more money from the boss to pay for the extra mortgage. That's what creates inflation, really, rising interest rates. You use rising interest rates to calm everything down. But really, I agree with the policy of that monetary policy of having interest rates at a level that encourages growth. So I don't disagree with him.
No, fair. Do you agree with the kind of perceived wisdom that we're going to get 2 interest rate cuts in 2026? That seems to be what most people expect.
Yeah, I think at the moment we're 375. I think probably a bit more. I could see the interest rate at 3, and then next year at 2.
Okay.
That's why in 2 years' time, the reason I think 6,500 for gold is because interest rates are going down. And then if they do go down and you're a money manager, you've got to find some way to make money for your clients. And it's not having them in US Treasuries.
Yes. Okay. Is there anything I'm missing here? Because I mean, genuinely, I haven't planned a conversation with you today. I'm here just to get your wisdom and to hopefully for you to kind of, you're like the shining light through this darkness.
Oh, thanks. You wanted to talk about the nuclear explosions and creating gold out from lead and.
Actually, no. That's quite interesting. Did we didn't really talk in any detail about this.
Well, let me just.
It was, yeah. No, this was an article in It was the Independent at the end of January, and I just thought it was an interesting thing. So the idea of alchemy was kind of a medieval thing that you could turn base metals, you know, lead into gold.
Yeah.
And it was always, no, that's not going to happen. But actually, it has happened. Okay, it is possible. So modern knowledge tells us the basic difference between, I've got to get this right, so let me just, right, an atom of lead and an atom of gold. The lead atom contains 3 more protons, exactly 3 more. So we could create a gold atom by pulling 3 protons out of a lead atom. That's the science of it. Don't ask me how this works. I'm reading a piece
If somebody
of
had
paper.
said that to me 50 years ago, there's no way I would have got involved in the gold market.
But then what?
That is...
I know. Well, I'm exactly the same. I'm interested, and I kind of understand that. But what basically, if you smash lead atoms together really fast, big, super high speeds, so you're kind of mimicking the state of the universe just after the Big Bang, right? Physicists at the Hadron Collider in Switzerland have incidentally produced small amounts of gold from the lead.
It is fascinating.
What's
Yeah,
happening.
it is
It's amazing.
fascinating. Yeah.
It's 29 trillionths of a gram.
But you know,
As it whips around the
the
mountain.
most interesting thing about gold has always been you can't destroy it. All the gold that's ever been mined is still in the world, Tim.
Yes, absolutely right.
Yeah, 200,000 million zillion tons. I can't remember the number, but all the gold that's ever been produced is in the world. But equally, that's now a cap. So you can't have a gold standard, for example, because if your economy is struggling a bit, you know, you print money. Is what you do. It's
Yes.
what the everyone does it. But you can't print gold.
No,
So if your economy, if your GDP is based on gold, you're restricted by the amount of gold that there is around. There's a lot of it around, but it's fascinating, to be honest with you.
It really is fascinating because it's just amazing that it comes down to these ultimately pretty simple concepts in the end. And as it builds, it becomes this unwieldy. Who can decipher the markets? Who can decipher you can decipher the gold market. I take that back, but you know what I mean.
No, I can't.
It
Most of
becomes
it's
very
guesswork.
complicated. It's a bit.
I'm just lucky.
It's sure. It's a bit more than guesswork. I know better than that. But of course, you've got scientists in China who can create gold as well.
Yeah, no, we've seen that, and that's obviously a function of cost.
Yes, quite right.
It doesn't really make sense to do it at the moment, but. Look, I think we're living through history, actually, in terms of what I do.
Yes.
This has been an historic 2 years, really. As I say, ever since President Trump was re-elected, we've had 2 really, really good years, and I think there's more to come. The next 2 years, as I say, is going to be a bit of a roller coaster for everyone. The whole, the status of the world is changing. You've got, Americans, Donald Trump telling Europe they've got to look after themselves, and then Europe having to go off and spend a lot more money on their own kind of arms and armies and so on and so forth. It feels as though we're really going through a period of turbulence. And that's fundamentally why gold is so strong. It is the safe haven that everyone believes in.
It is, indeed. It's a new world order. It's the Jumeirah.
It is the Jumeirah.
There you go.
Absolutely.
That will probably end up on an Instagram reel somewhere, I would think. Jeff's always good to talk to you. Appreciate
it's been
you
great.
Principal consultant at Rhodes Precious Metals. That's Jeff Rhodes. The oracle that is Jeff Rhodes, indeed. It's Mirror Business FM.